welcome to Wealth Within Live, the stock market show. I'm Dale Gillham, the Chief Analyst here at Wealth Within, and I'm joined for tonight's show by Janine Cox, Senior Analyst at Wealth Within.
Good evening, everyone. I'm really excited. This is our second Wealth Within live stock market show. We've got lots of great content lined up to share with you tonight.
Now, last week someone asked us to do a poll just as to what we want, so I did just that, and in a few minutes' time I'm going to be sharing with you all some interesting figures about who's actually watching the show.
Now, the great thing about this show is it doesn't matter whether you're a complete novice, a beginner on the market, or experienced trader. Tonight and every future show is about you, and our goal is to share with you how you can become more profitable in today's market.
So ask us any question you like, and we'll give you our expert opinion on stocks that you're interested in, and share with you just how you can avoid the mistakes and make more profits, and most importantly, take less risk.
Now, you'll notice there's a chat box off to the right of your screen where you can ask your questions. Remember, you'll need to be logged into YouTube to comment. To do this, you can simply go to your Facebook account or Gmail address, or you can create a YouTube account.
Now, just before we get into things, for those who've just joined us, live last week, with our live show last week, we had some audio and connectivity issues. I can't actually say that, Janine.
No, it's a tongue twister, isn't it?
It is a bit of a tongue twister. Now, we've been doing some extensive testing the past week, and so hopefully everything runs a lot more smoothly tonight. So please let us know if the stream is fine by using that comment box.
Now, Dale, I know a lot of people watched last week's recording, and we've received a lot of positive feedback, which is great. There was Ian who spoke and said, I really enjoyed watching the replay, love this content, and will be watching going forward. So if you have a question or a topic that you'd like us to cover, please comment in the chat box.
Now, just before we look at the market and answer your questions, I need to take you through our disclaimer. So with our disclaimer, what we're talking about here tonight is an educational show. This is not personal financial advice. So you need to be aware that whether you're asking a question or whether answering one of your questions, maybe bringing up a stock that you like or something that somebody else likes, we are not giving anybody personal financial advice. So that's what that disclaimer on your screen says right now. And as I said, feel free to ask us any question. We're really, really happy to answer whatever you like. So Janine, you can take it away from here.
Okay then, how about we look at the market first and then start to answer some of your questions. So let's bring up our charts. Okay, on the chart, on the screen there, you can see our All Ordinaries Index. So we can have a look at what it's done. There was a percentage there from last week's show, I think, is it?
Yeah, that's still from last week's show, yeah.
About 14.5%. Well, the market really hasn't changed since then. We've been waiting for the pullback. Now, you'll notice that on the chart that it's really slowing down now. So this is a monthly chart. So we always go big picture first. Whenever we're looking at a market or a stock, it's all about what's the big picture telling us. Because if you're looking at the micro view, then really you're not seeing the full picture. And that's where a lot of traders make mistakes, or even investors, that they're just looking at the day-to-day report that says, oh, this stock was up or it's done really well. And then that gathers their interest. But it's really got to be doing the right things from a longer term perspective as well to match the shorter term view. So if I go to a weekly chart there, you'll see quickly on the chart, we've had a number of weeks up as we talked about last week. So from the low, we've seen 4, 5, 6, 7, 8, 9, 10, 11. And this week it's slowly starting to come back. So the red bars indicate that the market is actually making a lower low than what it made last week. And the high for the week so far is lower than the previous high. Close today was on 6,260 points or thereabout. And it's just below the high that we had all the way back in August. So to think that, Dale, the market's only now clawing back what it lost in August, which was about 15.5% all the way to the December low. It's done pretty well to recover, but we're still to see that bit of a pullback on the market.
Oh, it is. It's a lot of probability, isn't it? That's really what we talk about on the marketplace, in that it did fall over 15%, and we've had this big rise up, nearly 15% now, or around 15% now, or pretty close to it. But it's just probability. The more the market goes up, the more the probability it's got to come down at some stage. It just doesn't go up forever and a day without coming down. And so seeing this long rise without any major pullback just increases the probability that's going to happen. So I'm really confident that it will pull back either this week or next week. Well, in the next 3 weeks, we're going to have a pullback, and it may have started already, but that's nothing to be worried about, is it, really?
No, and we're starting to hear stories like all the negotiations that the US has been making with the Asian countries is starting to come into play, that Brexit is now looking like it's starting to head towards the home run rather than being in big uncertainty. So that's changing things as well. So the market's likely to take a bit of a breather and then head up again from where it is now.
Oh, look, I totally think that. I mean, it's a real positive thing, you know, when the market is pulling back, because like I often say to people, you can't walk upstairs till you put your foot down to get some more leverage to move up to that next stair. And so this is really all the market does, is it goes up in stairs. And
I mean, a good example of exactly what you're saying is back here. If we look in February 2016, how it moved up in stairs all the way up, and then it moved down in stairs as well. See, what Dale is talking about is it's just
that's
explaining.
Travelator there, that bit.
Yeah, travelator sideways. Our market went sideways as well. It does that, so it could go up, down, or sideways at any particular point in time. So the key is not to be in the market or have a high exposure when the market's falling, or make sure that you've got resilient stocks. Now, you'll know whether you have resilient stocks by how they've performed in the past. People always thought the banks that they could just buy and hold them, but no, they fell significantly during that fall from 2015 onwards for 3 years.
Yeah, I think that was one of those things that's really caught a lot of people, because they, I suppose, blindly believe the banks just make money all the time for them and just continually go up. But nobody ever really does the research. And I mean, in my first book, when I was doing all the research in the top 20 stocks, you know, and then obviously continuing on from that for the next 10 years, NAB is one of the worst performing stocks in the top 20, you know, and it's a bank, and people think, oh, you just hold banks. And really, the banks have been going down for nearly 4 years to today. So therefore, it's proving that you just don't hold banks all the time. You can, and you'll make money over time, but if you'd held NAB for the last 20 years, you wouldn't have done a very good return. You would have been better in other stocks. And I find people hold things for dividends like Telstra, you know, and it fell for a decade, you know, and people were losing money. So it's about having a better balanced type of portfolio. And as we often say is, you know, hold stocks that are going up and get out of stocks going down. So, but let's get off the charts now, and we'll get back to some other things. And so, but thanks for that, Janine. But what we need to do is part of what we're doing in the show really is about keeping things in context, because, and that was really about the poll that I was talking about a little bit earlier, because trying to keep, what we have is a lot of different people that are watching the show, and we need to make sure that everybody's being covered. So some people here are great traders. They're full-time traders watching this show. So some of the stuff we're going to talk about is a bit low level for them. And for other people, they're just getting started, may never have bought a share in their life. So some of the stuff may be a little bit over the top or over their head, I suppose, if that's want to talk about it. So, but as I mentioned, we conducted a poll, and you told us more about you. And I did this in our community section on the YouTube channel. And the reason we did this was so that we could really tailor our content and how we talk to suit you, the people that are actually watching us. So what did the poll say? I've got a graphic, so the guys are going to put the graphic up on the screen right now. And so, but our poll simply said
that we'd love to know more about you so that you can give more, we can actually give you more of the content that you love. Please tell us, when it comes to the stock market, are you a complete novice investor, beginner trader with less than 12 months experience, or experienced trader of greater than 12 months? That's what we'd like to know.
So that's what we put up on the screen. So, and as you guys can see, it's pretty much everybody is a beginner or inexperienced. In fact, it was like
of
80.
Who responded?
Yeah, of who responded. So I think it was 11% said they're trading for over 12 months. Now we can sectionalize that down into, you know, well, are you a highly experienced trader, and how have you learned, and what kind of trader you are. So we can break those down into further polls. But right now, what we need to look at is 89% of the people watching or responding to that poll who have watched what we're doing and watching our videos are people that are beginners. They're beginner investors, they're beginner traders, and they're people that don't have a lot of experience. And I find that wasn't surprising to me. It is quite interesting. People go, well, why, you know, what do you think of the figures? And to me, most people that are getting started in the stock market always go to YouTube. And that's where I find when I'm talking to people on the phone, or I answer the phone and somebody's like, I'm looking at your website, and I start asking them questions. What have you been looking at? Where have you been going? How have you been finding out about the stock market? Number one is surfing the web and watching YouTube videos. And that really, over a period of time, that prompted me to go, well, we need to have a show on YouTube because partly because I was sick of people coming to us that had so I won't say poor idea about how the market was, but a lot of misconceptions, and they were being led down all these paths of the broke and the path of the misinformed and the miseducated because they were getting onto chat forums and they were getting onto all sorts of things that were causing them to make lots of mistakes and not get the market right. And I talk to lots of people all of the time, and to me that's what those figures just really came back to me and said, yeah, now we need to make our show much more for those beginners investors. Now, it doesn't mean we're not going to talk about trading and traders and give traders stuff, but we're trying to keep our analysis. So when it comes to our charts, Janine and I are not going to put a lot of analysis on the charts when we are bringing up stocks for you. We're going to bring you, 20 years plus years of experience each in trading the market.
So we are listening, and I've been told not to get too carried away with the analysis because that's what we do, lots of analysis.
Yeah. We could have people with their eyes rolling back in their heads a little bit.
But if you want it, you have to tell us.
So let's now have a look. Now that's enough of that. So let's have a look at our first question. And this one's from Ben. And Ben says, G'day, Dale. When you have found a stock to buy and you confirmed it's going up, do you just buy at market value or do you look into a shorter time frame for that day to find your entry point? Cheers, Ben. I can't get my mouth to work tonight. You can answer this one.
I'm finding his question interesting right from the start because he's saying he's found a stock to buy and confirmed it's going up. But on what basis have you confirmed it's going up? So as I was showing before on the monthly chart, very few people start with that time frame. And part of the reason is what Dale was talking about before, which is the medium which a lot of people are following. So if the masses are not succeeding, then don't do what the masses do. And they're looking at daily charts and short-term information that, on the news they might put up that Rio Tinto's gone up by a certain percent today, and that gets people thinking about Rio Tinto, but that's not a reason to be thinking that it's going in the right direction. So hopefully you've already worked out that your rules are solid. You've got to have solid rules, and you've got to actually confirm either that there's a trend in place, and Dale talks about that in his book, or that there's an earliest possible indication that the trend is turned up. And there's a whole lot of different rules around how you do that, which we can teach you to do if you want to learn that. So do you just buy at market value or do you look for a shorter time frame for that day to get your entry point? I think what we trade more for the direct equity managed account service that we run more medium term, but there are some traders out there trading short term. So it's really, it's got to suit the trader's style or the strategy of the portfolio and what you're doing. But say, for instance, that you have a rule that says once a stock trades meets this particular rule, and Dale talks in his book about trend lines. So the signal there, once you've got two closes above a trend line, is to enter the following Monday. Now, you can enter on the Monday. You could enter during the day on Monday. It doesn't really matter too much. Once you've got that medium-term signal confirmed that the stock is more likely to rise than fall. So I don't think you need to be so tight on the entry. It's more about making sure that you've assessed the risk properly.
I think the important thing is making the decision to buy or sell and then just doing it rather than whether you do it at market or whether you do it.
The challenge is that a lot of people say that they can buy, and that's not the issue. It's more about
how to sell.
How to sell. And as part of that reason is because they haven't properly assessed their risk, isn't it?
No, they don't have a proper strategy. But to me, a lot of people, when they're asking this question, it's about splitting hairs. It's like, well, do I buy at market or do I buy at a specific price once the market's open? And it really is splitting hairs, 1 or 2 cents or 0.5%.
Depends on the price of the share.
Yeah, and if its share's really volatile, it can make a difference, but not very much. In the overall scheme of things, whether you buy at market open at 10 o'clock or whether you set on that limit order that will trigger at a certain point during the day, it's 6 for one, half dozen the other. Sometimes you'll get it right and you'll go, oh, wow, I made a better buy. Other times you'll get it wrong and you go, oh, I got a worse buy, I could have done this. So it's not even worth worrying about. It's just, do you buy and then just put your trade onto the market straight away on the Monday morning,
and make sure you check it to confirm that it's actually filled. Otherwise, you might be thinking you're a hero if then the stock rises significantly and you actually didn't get in that trade after all. So it's another really important point. There's one more thing about that as well. When you're looking to buy on market, you can put conditional orders in.
Correct.
into the market. Now, there are certain vehicles out there to trade that you wouldn't necessarily want to do that and we can talk about that another time because that's related to more leveraged.
Well, it is related to a bit more to leverage
trading,
and everything else.
But just talking about cash and trading through your broker online to trade shares, it doesn't, it's like Dale said, it's not really as critical.
No, it's not really as critical, and that's the thing is, I said too many people think they're trying to time things down to a very tight, narrow price range and time range, and it's not critical. If you're more medium to longer term, then it doesn't matter which day of the week you buy it. Pretty much, it's fine. But if you're doing intraday trading, it's a little bit different. Yep. So it's just keeping things in context. But let's go and have a look at who's online at the moment and actually what they're actually saying, because I think we've had a whole lot of stuff here. So Ramit's going. Well, Ramit's first up on the gate tonight, so he bolted out of the gate at 7 p.m. So well done, Ramit. He said, "Hi, Dale. After watching a lot of your videos, I'm now planning to enrol in your short-term course." That's our short course in share trading. Even though I'm not a big fan of online studies, but because your willingness to help things, Ramit, you'll love the online the online course. I've done lots of online courses, and a lot of them I don't like, but ours is completely different. You'll absolutely love it, and I guarantee you're going to email me and say, "Dale, I love this course." I guarantee you're going to do that. He's also said, "Others I'm talking this bold decision." I think what he means is people he talks to are surprised he's making this bold decision. Thing is, Ramit, other people don't make you rich. That's your job. And a lot of people will try and pull you down or hold you back. And it is just the case. I see a lot of people going, "Don't do this, go and just watch YouTube videos." But at the end of the day, it's your life, not theirs. So you are making the right decision. I can guarantee it. It is. I said you will ring me and tell me how much you really like the course. It's great.
Gregory Asmanist asked about volume being low, and I'm assuming that you were talking about the market itself.
No, I think he's talking about the volume of us, but nobody else's comments. I'm assuming the volume's okay. But if it's not okay, let me know, guys, just to see.
Tom Crusaders, thoughts on the CBA, so all the banks.
He's got all the banks. So we'll look at those in a little while. And Greg's come back with NUF. Stephen Knotts looking for NEA or NEAMAP, which is a great stock, mate. I really like that. Ian says, "Hi, Dale and Janine. Greg's great program. Thanks." John Granger, welcome, John. I'm not sure I've seen your name before. Good evening, Dale and Janine. You're both looking very good. Thanks very much. Do you like my tie? It's good. My wife tried to keep me away from wearing it, but that's okay. Ian's got Ramit. "I'm keen to do the diploma. Really keen to develop as a trader too. I may start the short course. I will speak with somebody from Wealth Within shortly to ask some questions." For Ian, I actually was chatting with Paul earlier today, so he's wait for your call to give him a call. Then Ramit and Ian are talking with each other. There we go. Look at that. You have your own conversation, guys. That's fine. Ian's talking about, "Do all your courses include the diploma, include an element of mentoring?" Asked Paul that. As I said last week on a show, this is not a salesy pitch, this sort of show. It's not about talking lots about our courses and everything else. If you do want to talk about our courses, please just download the information and get one of our great guys. They're all traders. They all know what's going on. They'll be able to talk with you, ask you questions, find out really what does suit you so that you're getting the education that you need right now, rather than being under getting not the right education for you.
We might talk about it and then it's taken slightly out of context and not fitting exactly what you want, whereas on the phone conversation, at least that you can have a bit of a chat about what really does suit you.
Yeah, they'll ask about time frames, how much you got the time to study, where you're at, what have you done in the past, what sort of experience you got in the market, what do you feel you're missing in your trading, what sort of, how do you learn, those sorts of things, so they can really tailor things to make sure that you are getting a great experience, and that's why we have them there for you. So please do all that. But right now I think I'll come back to the chat forum in a little while, but let's go into the next question. This one's from, I'll just take my glasses off again. It's funny when I can't read short close up. This one's from Francis. So we need to go to the charts again. So we're going to bring up AMP. We've got Francis Migliore, I think it is. So Janine, if you want to bring up AMP on the charting, she said, "Can you look?"
He found a way to get in early, didn't he? Because he posted it early.
That was on our YouTube channel. Yes. So
just letting you know that because we know that other people have posted asking to look at certain stocks, but if you do post on our YouTube channel before the show, then you may be first in line.
And you can always email through before the show to info@wealthwithin.com.au. So do that, questions, etc. And we're quite happy to bring them up straight away. So do you want to have a chat about AMP?
Yeah, look, AMP's really had a torrid history. Have a look at the chart over the long term. So this gives you an idea about the personality of the stock. I mean, there was a day when people thought of AMP and thought, oh, yeah, they're a good company. They're going to be here for the long term. And a lot of people never would have guessed that AMP could be trading down at these sort of lows. However, any stock can, and this is what we were talking about in relation to banks before. You never assume, because all stocks go in cycles, and when in one of the sections of the diploma we talk about a specific topic which explains how markets unfold. And you can see here that AMP has actually taken out this low in 2003. Which is a really important move for AMP, because once a stock takes out its all-time low, it always means it could go lower.
That was a massive signal, wasn't it?
Wasn't it?
Massive.
Yes. Look, sometimes stocks can take out their all-time low and not long after that then turn. So now with a new all-time low, if we just squash this up, we can see now where
I was
it's
getting
trading.
a lot of people, not our students, but I was getting a lot of people saying in those months on the left-hand side of where your pointer is. Those
These red months where it was falling?
No, just down where your pointer was, all those. I was getting people going, AMP's cheap, should I buy? AMP's cheap. Yeah. And so many people think a stock's cheap when it's fallen heavily, but they don't know what cheap is. And that's one of those big things. I often get emails from people or things on our Facebook page, that sort of stuff, saying, I want to buy the banks because they're cheap. But are they really cheap? And I often say to people, how do you know it's cheap? And they go, oh, because it's fallen so heavily. But that doesn't necessarily mean it's cheap or not. And when you can't compare have that price of the share at that, let's say 235, where your pointer's sitting at the moment saying, well, that's cheap. You've got to compare it to something. And with a stock, you have to look at what's the value of the stock. So is the stock, if that stock is worth $5 and it's trading at 235, then it's cheap. But if it's only valued at $1, then it's really expensive.
But how does an individual know that's valued at? I mean, if the market's valuing it at that price now, that's what it's worth as far as we're concerned. So, if someone sees a stock falling and thinks, oh, that must be cheap right now, remember, a stock can always go lower. And the other side of it is, if the institutions with the big money are not putting their money behind it, why would you even consider it?
Correct. That's what I'm saying is you can't make an assumption on the share price alone.
Yes.
That it's cheap. You have to compare it to something else. It's not possible to say that that's cheap just because of the price of the share it's trading at.
Well, look, generally you would never use the word cheap anyway as part of your equation to assessing something. It's more about, or rarely would, unless you're talking about what someone else has said. Your comments would be more along the line of, well, have you confirmed that it's going up yet?
Well, yeah, I say, have you confirmed it stopped falling and started to rise? And that's more important than I'd rather give off money off the bottom to make sure it's going up. And that's going back to one of those other questions. I think this stock's going up in an uptrend, and most people I find don't understand trends. And when to confirm an uptrend is. So stay tuned, guys. We might show you one day.
Well, see, looking at this, you can clearly see that the stock is still going down right until the week of the 22nd of February. So now it's started to try to move up, but you'll notice before that it's done all this before. There's been plenty of times where it's started to move up, and you probably would have seen it on the TV at night. AMP's gone up, 1% or whatever at 2%, 5%. And that attracts a lot of people to try to buy into it. But still, it could fall further. It hasn't confirmed anything as far as the chart's showing us.
Yeah, and the thing is, what people don't understand is obviously it's sitting back waiting for that confirmation, and that's what we always talk about is trading on confirmation, not speculation. And a lot of people just speculate on what they're thinking a stock's doing. Because this stock, back in the 80s, AMP was the biggest insurance company. It was massive. Everybody had a policy with AMP.
Well, that's why everybody went crazy over it when it launched that day. Look what it did on the day that it, the week that this was the month it launched in June 1998 on the market. I'm sure there would have been a lot of people who were absolutely crazy to think that they were just going to get in. One of the reasons why we don't encourage people to look at IPOs while I'm on this subject is because you don't have a history on the stock and its performance.
Correct. And that's why, I was in Sydney when this floated, and my brother rings me up and said, hey, Dale, I've made all this money today. And I went, yeah, just wait. And he goes, what do you mean? I said, it's not looking good. And and it just kept falling away. And so, but he was like thousands and thousands of people that got AMP shares when it listed on the exchange that held them for years, falling away. So it is interesting. So let's go to another question. So we'll get off the chart for a minute, and then we'll come back and look at some of the other stocks for the guys that are on the posts here. So we'll get a look at the banks and everything else, because we've got a fair bit to cover. But we've got a question from Chili Dude who said, once bitten, twice shy. Well, actually, it's not a question. It's actually a statement. He says, Chili Dude says, once bitten, twice shy. I'm sick of the share market. And I thought twice about, do I talk about this tonight or not? And sometimes
you did.
Yeah, and sometimes you get comments like this from people. Now, it's generally when people are sick of the share market, it's because they haven't realised where the mistakes are happening in their trading or their investing. And it's generally because they severely lack knowledge. They're trading a market, they shouldn't never be in. For example, we're getting a lot of people in the last sort of 12 months about foreign exchange, FX. They're just trading it. Before that, it was Bitcoin for everybody. It was Bitcoin. And you ask them what their knowledge is, and their knowledge was not zero. Most of them was minus 10.
Yeah.
It was just speculation rife. It was like the tech boom bust again. And now it's back to FX again.
In a way, I'm glad that he's saying once bitten, twice shines. He's expressing the fact that he knows that he shouldn't be doing it, in fact, at the moment. And what Dale's saying is, with a bit of knowledge, you can completely turn that around.
Yeah, so it's one of three things. That's all I'm saying. It's either lack of knowledge, wrong market, or you're picking the wrong stocks.
Yep.
Like you're really trading the wrong stocks. And generally, they're speculative stocks that people pick. So they get bitten all the time, and so they lose money. So having once bitten, twice shy, hopefully that doesn't mean you stopped. Hopefully that doesn't mean you've given up and you're just going off somewhere else.
It's good to get to the point that you're sick and tired of not getting the result that you want, because that's going to encourage you to do something different.
And that's what I hope, and that's just getting the right process and and right strategies, and just putting some simple rules around what you're doing and what you're buying and selling, so that you can then start getting profitable returns. And when you start getting profitable returns consistently, the confidence will come back, and it's easy. We've turned a lot of people around, Janine and I, over the last 2 decades, that's for sure. So let's go and look at some of the people on the chat forum. If you want to bring up, can you on the charts while I'm talking, can you put all the banks into the charts, and we'll bring that up in a second. So Ian says he's in Canberra Ramit, so hopefully you got that one. Let's go. The video's very flash from John Granger. Thanks, John. Simo says, when you are looking to trade a stock, what's your take on macros versus charts? We just use charts, mate. That's what we do. Janine and I, what you're seeing here, we use all our analysis on charts. We don't use a lot of scanning tools and lots of indicators. In fact, we don't use indicators at all on our charts. You won't see us put any technical indicators on it. And some people say to us, how do you trade when you don't use indicators? And my answer to that is always much more simply, a lot less stress, and a lot more accurately. There's an old statistic that 90% of traders don't make money. And so just go to any bookstore, go online, look at most of the courses and look at what they teach, and just don't do what they teach. It's pretty simple. You don't need to be Einstein to figure that one out. So we don't do what the others do, and that's why our students are really consistently profitable, and that's why we're doing really well with our managed fund that Janine does all the day-to-day management of. Basically, the fund, it kicks along really, really nicely all the time, and that's really where we prove what we do. So, but we don't use macros at all from that point of view. Greg's saying the volume's okay now, so everybody's happy, so I've got to be happy about that. Hi, Dale and Janine. If you have time, can you look at Bellamy's? Yeah, we can look at that. Looks good to me based on the weekly, monthly chart trend. Yep, everybody's just saying sound better. Wes Farmers is another one, so whack that into your list. Peter Jury, howdy guys. Very new to the share market. Didn't have a great start with big. Have read your book and are now on the right track. Hopefully, well, you are on the right track, Peter, and welcome to the channel. So thanks very much. So let's go into the charts now. I've gone through those comments, and we'll start going through the banks and some of those other stocks, Janine, okay?
Okay, let's go. We've got NAB is the first one, cab off the rank. I think we should start looking at the monthly chart of NAB first, just to get you guys used to this whole process.
Isn't that a good example of why you don't buy and hold?
Cheapers. Look at the, let's actually put a horizontal line across here, all the way there from, if we started here in 1999, 20 years later, it's trading below that same level.
Don't buy it. That's why I was saying to everybody earlier, just because it's a bank doesn't mean you just hang on forever. And that's why I'm saying, NAB was a poor performing stock. I mean, would have been better in CSL and Cochlear and Wesfarmers and Woolworths and a whole range of other stocks.
So at the moment, I mean, it looks like we could start to see, we've seen a little bit of a short-term reversal on the banks as a whole. But looking at NAB, now you'll notice in Dale's book he talks about trend lines. Okay, so how many of you out there have been following the trends and trying to find trend lines on stocks since you've seen the information in Dale's book? So the aim is to get a trend line down the trend, and then we're seeing whether the stock's actually closed above it. But you can put trend lines on the monthly chart, weekly chart, just not on the daily chart. The trend needs to be confirmed on the weekly. So more about that in the book. So you can see there that NAB's really struggling to break through. Commonwealth Bank is another example. Let's start on the monthly chart. We can see there totally different picture for Commonwealth Bank.
Yeah, Peter Williams is asking about what about the dividends. I'm assuming he's talking about the banks at the moment. So, and dividends are a secondary choice for us. In terms of, there's no use losing 30 or 40% like the banks have lost over the last 4 years and collect a dividend. It just doesn't make wise investing. You're better off exiting the stock and forgetting. Dividends just help you fund loans if you've got those, or they are, some reasonable dividends on some of these banks, but if capital gain is always number one, and if you get a dividend, that's what adds to the return, obviously. But always go for capital growth, not dividends.
Mm-hmm. Okay, so that's NAB, Commonwealth Bank. Looking at that, it's still above the all-time high in the GFC, unlike NAB.
Big difference.
Yeah, big difference. So we'll just go back to NAB quickly. You can see the all-time high that occurred in the GFC in November 2007 was up around 42.66. Now, Commonwealth Bank, the all-time high in the GFC is way down here, so it hasn't actually traded down into that, and looks like it's actually pushing higher. We've seen this nice little reversal on the monthly chart as it pushes higher to get through to the trend line. Now, I'll let you guys think about where the trend line could be drawn for that, seeing that I've mentioned that on NAB already, but it has actually broken above that and is now trying to push higher. But because we're seeing a bit of softening on the market overall, you'd expect the banks to be part of that and see them come back a little bit. So Commonwealth Bank looking improved, but still a bit of a rocky start for Commonwealth Bank. And really, the next hurdle for Commonwealth Bank is around this level. I think once it gets through that, we should see it push higher. So Westpac. You can see here on Westpac a similar sort of formation to the Commonwealth Bank more recently, but it's still below that all-time high from 2007 and well below it. Just to give you a bit of an idea about how far below it is sitting at the moment, let's put a price range percentage tool on. So what we can do is we can measure how far it is actually below the prior all-time high. So if you bought just prior to the all-time high, when everybody was talking about the share market back in 2007, your capital return would still be below. You'd still be down on the shares. You may have made dividends to claw that back. Yeah, and I remember speaking to a guy who invested in a managed fund, and he told me that in 2016 his managed fund was still below where he started in 2006.
Yeah, that doesn't surprise me, and it does. And then there's a lot of surprising things that some of the people watching will not really have come across unless we start telling them what the realities on the marketplace, like things like ETFs and a whole range of things. It is so easy for you guys to, and it might be ladies, I'm sure there's ladies watching the show as well, but for you to beat the managed funds, whether they're ETFs or they're managed funds and whatever else. And you don't need to be a genius. You really don't. You just need some simple rules, and we'll share with you stuff as these shows unfold over a period of time. But we're getting a lot of people who just bought my book. They're beating the managed funds just using a $30 book, or what's in the $30 book. So it's great. So you're going to cover ANZ right now, and then what we'll do is we'll finish that and we'll go to another question.
Okay.
And then we can do the rest of the stocks in a minute.
Sounds like a plan. Okay, so you can see again, long term on ANZ, it is up over the long term. So it has done well. But again, as Dale was saying, if you look at what it's done over the last, say, 10 years or so, it really hasn't moved much. It depends where you're measuring it from, I guess, and that's the point. And that's really what we teach, is it's all about when you actually get in, not just being time in the market is not the important thing. It's actually timing your entry so that your risk is at the lowest possible level that you based on your experience. So looking at ANZ, I mean, still below the all-time high over here in 2007, but it has pushed off the bottom, a really nice strong move in February. We need to see that continue, but at the moment we're seeing that slow down, of course, on all banks.
We are, very much so. So we're just waiting for them to confirm, aren't we, really?
We are waiting for them. Look, Commonwealth Bank's looking the better out of all of them, and it generally does do that. That doesn't mean that you can't trade the other stocks and make a good return out of them. You can, but it's about getting in. I mean, if you looked at, say, ANZ, for instance, in early 2009, you would have had a nice trade out of it and been able to get out sometime after. And again, in this early period in 2012, a nice trade, and then there would have been heaps of signals to get out before this correction into the low in 2016. So that's just a simple example.
Yeah, it is just a simple example, and you can. I mean, even NAB being the worst stock. So that's it for the charts. We'll just go back to the questions in a sec.
Let's go.
But even NAB, you could trade that and make good money on that over that period of the last 20 years, where you saw it was sideways if you'd held it for 20 years. But during that 20-year period, there's plenty of times to make some really good money with some simple rules, and you seriously will outperform the managed funds. There's no doubt in my mind that everybody watching this show can perform much better by beat the managed funds, beat your brokers, and not take higher risk. That's the important thing. Is all too often people think, trading, you're risking your money, and this is sort of what Ramit's friends might be thinking about when they mention him. Oh, well, you're going to do this course.
Yeah.
And a lot of people, they're putting their biases or their beliefs onto you and their experience of the market. And I often find people, they don't understand the market and then say, the share market's risky, it's gambling. And I ask, have you ever bought a share in your life before? And the person says no. And I said, well, how are you qualified to tell me that?
But it's not easy for that person who doesn't know a lot about the market to make a judgment when someone else is telling them how they should think about it, because it could be that person that's telling them that is an authority in something else.
Correct, but doesn't mean they're authority in shares.
That's right.
So well, it is. But it's like when I was a young guy, when I was sort of just out of school, and one of my first mentors said to me, asked me what I wanted to do and achieve, and I said, look, I want to be successful and I want to, make $1 million and retire and things like that, and retire wealthy. And he goes, well, Dale, the biggest piece of advice I can give you is if you want to make $1 million, find a millionaire and then just do what they tell you to do. And yet most people find people and take advice from people that are less successful than they are.
Yes.
And to me,
that's what you were talking about before with the YouTube.
Yeah, and I was. To me, it's a known statistic or known fact that you become like the 5 closest people around you. So, to me, there's an old saying, you can't fly like an eagle when you hang out with turkeys.
Well, I've still got my hair.
You still got your hair. I don't have mine. So, but you surround yourselves with successful people or people that will help you and work with you to get to where you want to go. And that's really what we're saying here. So the next question we've got, so you can read this one out.
This one's a good one. Punisher 2222, great video. What analysis tool do you use in your videos? Really good question on 2 fronts. One is, it's called Optima. However, you are absolutely right when you use the word tool, because it is just a tool. And if you don't have the person driving that tool with the right knowledge and being able to understand how to get the most out of it, then you could spend hours learning how to use tools, because there are tools in every piece of software that are for lots of different functions. I found with Optima that there are specific things that I really like using. There are certain things that we teach in the course, and you don't need to learn every single thing about a piece of software to be able to drive it and use it well. It's about what you get out of it. So there's some simple things that I've shown you on the screen when we've just looked at the software tonight, and you can see Optima in the top left corner. So when people come through and they do our courses, so if you do the short course, the diploma, you actually receive the software in as part of the course package. So that helps a lot of people go through. So the whole course is actually documented with the software, and it makes it easier to be using that all the way through.
Well, it is. I mean, to me, you're right when you said tool. It is a tool. And all too often what we find, and even the guy that owns Optima, he says, all too often people go to him thinking the tool's going to make them successful. And the tool is a tool. If you've got a hammer, everything looks like a nail. That doesn't mean it's going to build you your dream home.
But the thing is, you could buy a car and think to yourself that you could teach yourself to drive. Now, it wouldn't be legal, but you might work out how to drive it yourself. But
you're going to be pretty dangerous for a while.
You'd end up breaking a lot of road rules probably if you didn't learn how to do it properly.
Correct, absolutely correct. So, but it is a good thing. It's always learn what you to do first before you get the tools to do it. So, and we find that's the case. We get so many people coming to us that have spent tens of thousands of dollars on software for scanning the markets and doing, scanning thousands, multiple markets and courses on how to use the software. And they're pretty crappy traders because they just don't understand what's going on. And they ended up the actual tool or the software becomes an expensive clicker coaster to put their mug on. And that's really what most of them are. We love this program, but again, it's about understanding what to do with it, how to use the information that it can give you and how to make profits consistently. And that's about having a process, having a plan that we keep talking about. So let's do one more question and then we'll go back to the stocks in a second. This one's from a Mark, and I can't hardly say your name, Mark. It's Chloe Butchar, I think. He says, "Hi Dale, thank you for providing such valuable investing information. After a long bull market in bonds and yields at record lows, I'm confused why one would hold bonds. Can you please discuss the role of bonds in a portfolio and any benefits of having bonds in a portfolio compared to cash?" Interesting question, isn't it? You're thinking about that, aren't you?
I am, because I know, on one hand, I know how the industry thinks about it. On the other hand, it's horses for courses as well. It depends on where you're at and what you're aiming to do with your portfolio. And also, cash doesn't earn much at the moment. Bonds, you could be looking more longer term in a lot of bonds. And do you really want to be doing that? The cash keeps you liquid. You can go in and out of shares. So I think there's a lot of people that use bonds more to get the income out of it, to get the yield from the bonds.
Correct.
And it's really got to be on a case-by-case basis as to what people do. But I know a lot of clients who actually don't go into bonds. They just use shares. And if you've got the cash sitting there, it means that you can actually respond when the market's moving up like it has recently, rather than trying to find the cash to be able to invest in it and move from one area to another in the short term. That can make it harder. So it's simpler to have a portfolio that's not as diverse, but particularly for people who are starting out. I've worked with some people and I ask them, do you understand what you're investing in? And they tell me no. They've gone to an advisor or somebody that's helped them to buy different investments, and they don't understand the nature of the investments that they've got.
No, they're not reading the prospectuses or understanding the advice that the advisor's giving them. They're sort of just trusting. But when it comes to bonds to us are cash. It's simple. Bonds, are cash or cash product.
But they pay more than cash.
But they generally pay more than just a term deposit, that sort of stuff. And they're, generally they're longer term, obviously. And you're locking in that nice yield. Bonds you can get capital gains out of bonds depending on what the interest rates are doing. And so you can actually sell off your bond and make a capital gain on that. But you really need interest rates that are moving in the right direction for you to do that. But really, we don't do a lot about bonds, and not necessarily. When you've got good dividend yield paying shares here in Australia, like your Telstras and your banks, it's about getting them when they're going up and getting a good dividend yield for that income. But yeah, if you don't have the share, then you're not getting the income. So a bond could be better for somebody who's just wanting that stable income stream, or somebody maybe in retirement, etc. But if you're in the growth phase, probably bonds are not really what we would do for anybody's portfolio. But again, it's context. What's the goal of your portfolio? What are you trying to do? How old are you? What's the plan over the 5 and 10 and 15 years? And that's really what you need to consider. So, you got any other comments? Or
no, I think that.
How about we go back to the charts and we'll start looking at, while you bring up the charts, I'll actually look at any of the other little questions.
So is it near maps was next after the banks?
Oh, I don't know. It's in order on your thing. So we got Bellamy's, I think, is next. I think Bellamy's.
I think someone mentioned near maps right up near the top.
That's
all.
They did.
So I thought we'll cover that first. How about that? Just I don't want to miss someone
Ian's
out.
got Bellamy's here too. So where we got here? Yep.
Gee, Ian, good on you. Just typed it all the way through.
Yeah. Look, let's just keep going.
All
I'll
right.
find them. I'll look at your charting software.
He's not letting you forget that he wants to look at Bellamy's.
Okay, Bellamy's.
Okay, so Bellamy's, interesting share. As Dale was talking about before, it's all about looking at the appropriate investment for your portfolio. And here we've got a stock that is highly volatile, as you can see. I've started again on the monthly chart, And looking at where the stock has come from, in March 2008, it reached an all-time high. Since then, it's fallen 71% to this low. Now, it has recovered a little bit, but this is describing the nature of the share. Now, if you have rules and you have a strategy to manage your risk, you wouldn't be in there all of that decline. But you can see why this is not a share to just pick up in your portfolio if you don't have an exit plan or a strategy to manage your risk. Same thing here. I would have a look. The history tells you a lot about a share. It tells you what it could do in future. This is no coincidence. The stock has fallen about the same amount each time it's had these major declines, showing you that could happen again down the track. So it does have really nice runs when it rises, but the falls are often swifter and by almost the amount that it rose. So if we look at how far this share actually fell, it fell almost what it when it launched onto the market back in 2014, it came back almost to the level of where it started. And again, the same thing. So right now it's actually looking a lot better. Looks like it might be starting another move up. But you'd have to go to the weekly chart to see if there was a good move there to be able to trade it. And it looks like Bellamy's has made a really nice move there. We've seen that outside bar. This was the week ending the 1st of March 2019, and then the following week it continued higher. So that's a really nice move to see. Now, in our Trading Mentor course, we talk about some simple rules that would allow you to trade a stock like this and do it fairly safely. Same as the trend lines in the book, but there's a really good strategy in there. Obviously, if you want to be a more experienced trader, which these sorts of stocks actually tend well to more experienced people who have actually gone down the path of learning proper strategies, then you can actually time your entries and exits to generate income out of these types of stocks, because it is quite volatile. I mean, if you look at any 1 week that this stock has gone up significantly, it's quite a big range.
Oh, it is. It's a big stock. Didn't we cover this last week?
I think we may have talked about it last week. We often get this. We even get this one on our Traders Forum every month.
We do.
People like to talk about Bellamy's. So we look for levels of resistance. So you can see here that it may actually slow down when it gets to around this $12.60 level as it's rising. So far it looks good.
The next stock, we've got a couple of other comments here. So we're going to cover Wesfarmers next, because Aussie Warrior asked about it. But Peter, maybe we can cover some of these questions while we're looking at it. Peter Jury says, howdy guys, very new to the share market but didn't have a great start with Big. I'm not sure Big is whatever that is. Have read your book and are now on the right track. Hopefully, yes you are. Michael Butler, thought on BVS Brava Solutions. We'll have a look at that. So Janine will put that in a...
What's the code for that?
BV for Victor, S for Sam. Then we've got Ramat's asking about, is it still wise to buy Kogan? We can have a look at that for you, Ramat, as well. We've got about 14 minutes left, so we should be able to cover all of these if we keep it nice and tight. Michael Butler saying, how does a novice go about picking a genuine growth stock for long term? Interesting, isn't it? That's a good question. Interesting. How do you pick a growth stock for long term? Tom saying, great program. Ramat's going, when are you guys going to SMSF series? I'm eagerly waiting. Well, Janine can answer that because she was putting it together. So, and Peter's got a comment. Peter Jury says, I'm listening to you. Are you a millionaire? Yes, Peter. He's saying find a millionaire and stick to them. So that's fine. But yeah, thoughts on A2 Milk and NUF. So they're the other ones.
Okay, so Wesfarmers, are we running with that?
Yes, we're running with Wesfarmers.
Okay. So you can see with Wesfarmers, it's had a rocky history as well. Look what it did during the GFC. I mean, now Wesfarmers was the big diversified stock on the Australian market, and yet it too really suffered during the GFC. Shareholders dumped it, institutions dumped it, and it fell around 66%. So more than the average, more than the market fell itself, which was around 55% during the GFC. And yet it recovered relatively quickly and continued to rise through the all-time high, but has done nothing over this whole period here from April 2013 all the way until it announced, there was an announcement about selling off the Coles Group. So in May 2018, it started to move up again, but that took a long time. So shares can actually just underperform for a long period of time. So there's a point sometimes where we might be trading a stock and we just have to let it go if it looks like it's not going to keep moving in the right direction. Now, Wesfarmers has actually it fell back after the Coles demerger occurred, and Coles is listed in its own right on the stock exchange now. But it really has struggled for some time, and it's been quite volatile over the last couple of weeks. So, look, it's holding its own at the moment. We have seen it reverse strongly. So this was last week, or the week before last, and then last week it started to pare some of that back. So it is stabilising. What we want to see is these moves lower become higher. So you can see it's that stepping movement that Dale talked about. That's what we want to see as the stock moves. You can see it on the left-hand side here as it steps up and moves higher.
Cool. Well, let's look at the next stock. We've got...
Near maps?
Yeah, near maps for Steve. Steve Otts has asked us for near maps. Have a look at that. That's pretty good.
Now, this was a stock you reviewed a long time ago, and it has actually appreciated in value, as you said that it would. And it's once stock makes all of these peaks at a certain level and it breaks through it, it's often an indication that it'll go up for the medium to longer term, which Near Maps has done. So you can see the nice trend that it's formed on the chart. Now, looking at it now, some people might say, well, look, is this a buy? And from my perspective right now, it's gone. It's really strong. I'd be looking, if you're holding it, then great. Otherwise, you wouldn't be looking to enter right now while it's going up like that. You can see that stocks, when they're rising strongly like that, they look like that they're climbing a wall, which is what it's doing. And look, notice how it's become much steeper. The angle of the rise, and this is not a trend line, so I'm going to draw a dashed line just to show you that the stock changed angle over time. So it was rising to this sort of an angle and then all of a sudden accelerated away from it. And often stocks will come back somewhat to test the angle of that rise before, which we could see in this share over time. But if you've got the stock, then you'd obviously want to make sure that you've got a good set of rules to manage your risk as it's unfolding, or make sure you can preserve that profit that you've got. But nice stock.
The next one's BVS by Michael Butler. He's saying thoughts on BVS Brava Solutions.
Yeah, Brava Solutions has trended up over time.
That's a daily chart. Okay.
We're going to something different. Well, that's naughty, isn't it? Better get back to the right strategy here. Don't want to be leading you astray or anything. So looking at the monthly chart, we can see that it did spend some time going sideways over this period here, first couple of years, and then accelerated nicely. So it really developed a nice trend. I think it looks fantastic, this share at the moment. It's in a nice trend, and like the stock we just looked at, Near Maps, it has accelerated away quite quickly. It doesn't mean it's time to sell, because you obviously need to have some sort of a solid rule to be able to sell it. I would start to get a little bit concerned, though, if it started to come back below this prior low here, which was the week of 22nd of February. But at the moment, it looks like it's still holding up. It may come back with the rest of the market for a couple of weeks, and that would be the real test of this stock. But, it looks like you'd be able to get a trend line up underneath that.
Yeah, you would. You would be able to get a trend line up underneath it, but it's just starting to run a little bit faster, isn't it, right now? So, eventually it'll exhaust itself, but right now it's still looking all right.
You can see how once you get some nice little solid entries in here, there was no trend line down from this point here to be able to get an entry, but there are some other rules which we teach that you could have got a good little entry in there for a short-term opportunity.
A2 Milk. So I'm trying to find out who's got A2 Milk. I know Ramit wanted Kogan. So
that was down low down.
A2 Milk. Zoe Lee, thoughts on A2 Milk. Didn't we cover that last week for you, Zoe?
Might have been a different person.
No, I think it was Zoe last week.
Was it?
Because I remember she was new to the channel, yeah.
Maybe she just wants an update this week.
Maybe she did. Bellamy's an A2 Milk we covered last week. I think we're going to have to say, no, from last week we're going to do another stock. So.
Okay, looking at it, just like the market, it looks like it's softening off a little bit. There would be a trend line up underneath this rise here, so it may just come back to the trend line. And you'll often see when a stock breaks through its all-time high, it can come back to try to test support before it then gets sufficient momentum to move on again. But right now, the trend's still strongly up. It still looks good. No change from last week, really.
Okay. Zoe says she wasn't listening last week, but she didn't watch the recording. So it was on the recording last week, Zoe. So that's fine.
Still looking fine at the moment. So Look, I mean, if it pulls back, if it provides a decent pullback, there may be an opportunity to look at it for another buy as it pulls back. But I'd be looking for that pullback and then followed by confirmation of a move back up again.
Yeah. So what we next shot is New Farm we've got? New Farm for Gregory S. Manners. So having a look at that one.
Okay, New Farm. Starting on the monthly chart. Oh, very checkered history as New Farm. And there was a whole lot that went on, I think, at one stage with the Chinese, and that really affected the pattern of the chart. But this stock is really great for teaching because of some of the things that it shows in terms of support and resistance levels, in terms of patterns on the chart, which I won't go into a lot of detail on, but I will say that it actually resonates to particular levels. So if I put a line across here, you can see that it's slowed down at that level before, and this is where it's slowing down at the moment. So somewhere in that zone, it doesn't need to be precisely exactly on a low or high, but you can see there's a zone right there. Now, it has broken back below that line that I've just applied, but it'll be interesting to see if it can hold that level or whether it's going to come back to the next level, and that's more likely down here, closer to the $4.50 mark. So when a stock's making lower lows, you can see how it's swung down to this level, moved up for a couple of months and fallen away. There's always a potential for a stock to keep coming back. And that's where trend lines can be really important. So having a look at whether the trend's changing on the weekly chart in the shorter term. And at the moment, we don't have any evidence of that happening just yet. So it's something that if you were looking at this as an opportunity, then it hasn't been confirmed yet. But interestingly, there's this big gap, Dale, on the weekly chart up there, which at some point these gaps will fill. But the challenge with that is that a stock can always keep falling before it, for a long time before it eventually comes back and fills its gap. So you can see here it came back up and filled the gap here in around, where was it? Around October. Yeah. So that's always an interesting thing for traders to watch out for.
Do you want to bring up one more stock? This is your favourite stock.
Okay.
Just to keep you talking while you're talking. BHP for John Granger. So we'll cover one more stock because we've got a couple of minutes left and then we'll end. We've got another.
Actually, can I tell the history as to why this is my favourite stock?
You can do that.
Not just because it's the big Australian BHP, and I am a bit patriotic when it comes to Australian things. I don't know if any of you out there are like me in that when I go to the supermarket, I look for things that are made in Australia, product of Australia first. That's me, So when I'm looking at BHP, I think about an experience I had when I went to a conference that was all about fundamentals many, many moons ago. And I was sitting next to an elderly gentleman who was quite experienced in the fundamental analysis, and he was complaining about BHP. And I said to him, well, can I just share something with you? A long time ago, I realised that BHP was working on cycles and that it was very cyclical, and roughly every 5 years, the stock has a low. And he just looked at me as if I was off this planet.
Yeah, he would have thought you were off the planet.
So I grabbed a serviette and I drew this chart because it was imprinted in my brain because I know it that well. And I drew this map of BHP on the chart and showed him. I said, you can go home and have a look at it and see for yourself. So that's why it's so important for you guys to understand the history of the stock, because BHP is still working to that pattern today.
Well, it does. And that's why we keep saying to people, it's not just one analysis method on the marketplace, which is price, which most people do, which is all the indicators. It's price, pattern and time. And if you're not using price, pattern and time, you're not using all the tools you can use.
Yes.
And that's really important. And that's where with some of the questions we get asked from some of the people on this forum and on the YouTube page and our Facebook page, most people watching would only be using some basic price stuff at best. And that's really why when you're analysing a stock or a market, you really do need to bring all three key elements into it to do a much better job. So what are your takes on BHP because we've got a couple of minutes left and then we need to wrap it up.
Well, I mean, it's got itself out of a really checkered area, which was in this period here into the end of 2018. And big part of the reason that occurred was because of what happened with that dam disaster.
Yes, absolutely.
And Brazil, and it was all about Vale not being able to supply, so therefore its competitors' share prices appreciated. But BHP's share price probably went up a lot less than what Rio and FMG.
Fortescue,
Fortescue's performed the best, so it was really in the limelight there. But BHP could, I think it's because only about, 40% of its revenue or 45% of it comes from iron ore. So, but look, when you see a breakout of this sort of resistance, you see how there's this history. Remember, I was showing you that before, that the stock's broken out of that. Quite often they can come back and retest that. Now, it has gone up for 3 months. You can look at how far BHP tends to rise over the history before it pulls back, and it often can go up a few more months, a couple more months before it then has a pullback from its current level. At the moment, it's looking quite good. There's a bit of a gap down here on the weekly chart, which BHP, when it comes to the weekly chart, will often fill these little gaps. So you can see there was one right back here, which it's come back to. There was another one here. So, look, at some point, it's possible that it could fill this one. It's filled a short-term one here at the moment, but it may go up first before it does that.
Yeah.
We're expecting the market overall to pull back for a couple of weeks. It may get softer during that time, and I hope it does soften off, because that would actually bode well for the next move up on it. We'll just have a quick look at the daily chart.
Yeah,
Now, day traders often trade BHP on the daily chart and get really confused by it because it can gap all over the place. So you really have to have experience, and we often encourage people who want to trade short term and then go to who want to trade and do it for income short term to first learn more solid structured rules through our diploma course first, and then start to learn about how to come up with strategies for really short term to make it work. And even people who have been trading short term, if they then turn around and switch their brain into trading medium term, a lot of the short-term stuff just falls into place so much quicker.
Yeah, and they tend to make a lot more money too.
That's
a
right.
lot more quicker. So anyway,
that's BHP looking good at the moment with some short-term downside potentially, but it's got the potential to keep rising.
All right, so let's get off the charts now. Just a couple of comments there for some people. We haven't been able to cover all the questions that everybody's asked. I think we've covered most of them, but we've got Jovial Jedi said, "Hey guys, cheers for the time that you give us." That's fine, matey. Other people are saying thank you, so that's really, really good. Ian saying, "Thanks, Janine and Dale. Great live video and info yet again." So fantastic. Thanks, guys, for actually being on tonight. But that really does bring us to the end of our second show. Now we've had some little technical issues again. A little bit of the sound, tiny little bit of sound earlier, and I think some people have said a little bit of a blurry picture. We're trying to work it out, so we're still working the settings. So thank you for being patient with us. We are working on everything to make this a really, really awesome show in terms of not just what Janine and I say and how we're answering questions, but also the video quality and the audio quality. So please keep giving us feedback. Love to get some emails from you, but this does bring us to the end of our second show. And we really do hope you enjoyed it. And as always, we really appreciate you sharing your valuable time with us. And we do really hope to see you again next week.
So we'd love to get feedback from you on tonight's show. Please send us an email to info@wealthwithin.com.au. Just type Wealth Within Live in the subject line. Also, let us know if you have a question or perhaps there's a subject you'd like us to cover in next week's show.
So thanks, Janine, for tonight once again. It was
Thank
a great,
you, Dale.
and I'm sure everyone really did enjoy your comments, but this is the end of the show. Remember, you need to like the channel, like the show, and please subscribe to the channel. That really does help us. So, and also helps you so you can keep up to date with what's happening, and make sure you are online next Tuesday at 7 p.m. So for now, goodbye, good luck, and good trading.
Good night, everyone.